Tokyo inflation slowed in June as utility subsidies kicked in, but underlying price pressures remained firm, keeping the door ajar for further tightening from the Bank of Japan. Core inflation rose 3.1% from a year earlier, down from 3.6% in May and the 3.3% pace expected by markets. The closely watched core measure, which strips out fresh food and energy prices, eased to 3.1%. That was down 0.2 from May. Now, food inflation remains rampant, however, with rice prices up nearly 90% on a year earlier. Services inflation is also elevated, sitting just above the BOJ's 2% inflation target. Following the data, markets remain split on whether the BOJ will hike again by December, putting the probability of a 25 basis point rate hike at 50%. The challenge for the BOJ, however, is that its own forecasts have the core inflation rate slipping beneath its 2% target next year, even as price pressures remain acute today. Earlier this week, BOJ board member Tamura said there was no preset path for rate hikes, adding the next move could come much sooner or later, depending on how US tariffs hit Japan's economy. He added that if inflation continues to overshoot on a sustained basis, that rates should rise in stages, with 1% a rough guide for Japan's neutral rate, around double the current level. The BOJ next meets on July 30 to 31st, where updated forecasts could be decisive. Even with elevated uncertainty, recent inflation trends increase the risk of it having to move earlier than current market pricing.